And obviously, I was one of the people banging the drum saying there is no 4-year cycle this time. And obviously, shit's down 50% since I was talking about that. Oops,
Yeah.
whatever. I don't use leverage, so it's whatever.
Yeah.
But at the end of the day, yes, it's always a liquidity issue. The technology works to the use cases that it has presented itself right now, but it's always been a liquidity story. The reason why Bitcoin has risen so fast is because the central banks, led by the Fed, starting in China in 2008 and post 2008, have been printing lots of money, and we have an asset with a fixed supply that is risen markedly in price. So it's always a liquidity story. The liquidity situation that I believe we're in right now is one that is this AI deflationary event that needs to be underwritten by printed money. And until we get that sort of realization by the central bankers that the alternative is way worse than, continuing the game of printing lots of fiat money, then we're going to be at these levels. But again, I have full confidence that central bankers want to maintain the status quo and don't want to allow a 1930s style deflationary collapse.
Yeah. So let's jump over to maybe another catalyst on the other side of the ocean of maybe what could lead to that. You talked about in your essay the iOS warfare, about direct ties between the Iran war, the Fed easing. A lot of people are saying maybe the war is an excuse to print money. I don't know if the governments need excuses to print money. They're always going to find a way to do it. But how do you think about this iOS warfare, and what are you paying attention to in this war in regards to global liquidity?
So obviously this is an oil story, and the question is, how long will the Straits of Hormuz be closed, or how long will it take to restart energy production in a lot of these Persian Gulf producing states once the war gets to a level where they feel comfortable going back and rebuilding things, right? That's all that is the question that we need to answer as investors. Again, it's very difficult to understand how that plays out. But the longer that the hostilities remain between the United States and Iran, the more disruption there will be to the energy flows. And at some point, because of the negative economic effects of that, I believe that the Federal Reserve is going to be forced to start printing money. And now it won't be like they'll have an excuse, whether it's the US